Hey guys, welcome to the webinar. I'll be starting in just a few moments. We have tons of people piling in here, so welcome. Please let me know if you can see my screen and hear me clearly. Just put a yes in the chat box. All right, so everyone's saying yes, perfect. I'm trying to start my camera here, but it won't cooperate. So welcome everybody. How you guys doing? Let me know how you guys are doing. So everyone's saying great. What are you guys trading? So are you guys more interested in FX, futures, stocks, cryptos? So some people are saying stocks, futures, indices and FX, futures, FX, oil stocks, E futures, minis, gold, stocks and gold, crypto. Okay, cool. So, I'll cover a lot of that ground today. So we got tons of people piling in. I'll give this another moment or so, allow everybody a chance just to get seated. Nice to see you guys. Thanks for showing up. So Winfred says cryptos, Forex, and stocks. Kirby says I bought more QQQ puts today. Yeah, we'll discuss where the Nasdaq is right now. It's really in a. Hey Mustafa, how are you? Dan, GameStop. Yeah, I bought some puts on GameStop. I'll share that with you guys. I couldn't stay out of that market. All right, I'm going to just get started. There's going to be hundreds of people piling in here, but I'm just going to go ahead and get started and we'll go. So Anonymous says, does your system work on leverage ETFs? So I have a price pattern, price action trading methodology that works on all trading instruments. I don't care if you're looking at interest rates, you're trading orange juice futures, cocoa, corn, because I did all of that. I was a stockbroker. In the early 1980s, I was a commodities broker for 20 years. I've been in the FX business for the last 20 years, and I actively trade all of that: stocks, gold, oil, indexes. So let me just kind of briefly introduce myself for those of you who don't know me. So let me just start this off. Welcome to this 4-day live trade execution training session. My name again is Mark Shawzan, the pattern trader. Over the next 4 days, I'll be showing you trades that I execute, under live market conditions. I'll show you how I assess a risk reward opportunity using only price action and price patterns. I only use clean charts. There are no indicators on my charts. And what I'm trying to do is take a piece out of the middle of large moves. I'm not looking to day trade in and out and compete with my broker. So I'm not looking at a 15-minute chart where I'm looking to snag 7 pips here or 15 pips there or $1 or $2 on certain stocks. That to me, it's a gambling game. It's it's just arbitrary. Where something is going to go in the next 15 minutes, the next hour, even the next 4 hours is arbitrary. Sometimes you get it right, most times you get it wrong, and then the broker ends up with all of your money. So I've been honing my trading methodology over more time than I'd like to, recollect. I've worked at all of the big investment banks in the United States, the big brokerage firms. I started out with I started out with Merrill Lynch. I went to E.F. Hutton. I went to Shearson. I went to Drexel Burnham. I was a vice president of all those, vice president of Oppenheimer. And I've been trading since the early 2000s, just independently. And then in about 2015, my now partner, Peter, my marketing partner, said, look, you have to share your system, with others because people are losing their shirts. And I really didn't want to do that. He actually approached me in like 2010, and for 4 years I said, look, trading is a solitary game. I don't want the pressure of thousands of people, hanging over me. Look, I can win, I can lose 5 out of 6 trades and be a huge winner. And, I'll show you what I mean in just a moment. So, you go through, phases where, you lose a lot, and then I'll make it all back in, just a few months. And so that's kind of my trading methodology. It's not for everybody. Let me just kind of walk you through, kind of give you a visual for, what I'm trying to do. So a couple of weeks ago, this was Sunday, February 22nd, in my weekly email on Sunday, I sent out this chart. This is the Nasdaq. It was a weekly chart. And I said on my chart, the key reversal at the peak of an ascending, broadening price pattern suggests a lower trajectory could be imminent. And that was right at the top when the Nasdaq made an all-time new high. And since that time, the Nasdaq dropped about 10 or 15% since I sent that email out. Now, it was really on a prior Friday in my weekly master pattern trader sessions. These are live events every Friday at 11 a.m. Eastern time. I have members from all over the world that have been in this chat room for years now. I go through all of the markets, and I was showing them how I saw 5 bearish price patterns on the Nasdaq and the the Nasdaq trading instruments like the QQQ. And so on that Friday, I kind of, I guess I did such a good job convincing everybody else that I convinced myself, and I started to load up on the triple Q put options. So the triple Qs is an ETF that tracks the Nasdaq. If you want to buy the Nasdaq, it has all of the big stocks in there, and it goes 1-for-1 with the Nasdaq. On the other hand, I was looking to bet on a decline. So I was buying what I call put options. These are very leveraged. I call them, weapons of financial destruction, because they can wipe you out very, very quickly. And in the case of these put options, when I put them on February 19th, the QQQs were trading at about 324. And you could see that my strike price was 320, which meant that I needed like a 7% move. And I need it to happen by the following week. You can see the February 26th, that's when they expired. So I put them on February 19th. A week later, they were going to expire. And if they didn't drop 7%, all of this would have expired worthless. So I ended up buying 350 of these put options at an average price of $1. Now, each one of these put options are based on an underlying QQQ of 100 shares. So you have to multiply 200 times $1 times 100. So that means just, this, order here was 20,000. So collectively 350 cost me about $35,500 that I would have had to kiss goodbye if they didn't fall to my strike price by just the next week. So, with the case of options, you need to be right, and you need to be right away. And what happened was the following Monday, the market fell out of bed. The following Tuesday, the market went through my strike price of 320 and went all the way to 310, which meant that the value of my put options were 10, because I had the 320s. When they go to 310, the put options were worth $10. So the put options that I bought for $1 went all the way to 10. And by the time I could get out, I got out some at 585, some at 575, 631, and some at $8.10. Now remember, I paid $1 for this. So I made 800% on this sequence of executions. All in all, I made 600% in 2 days and made $195,800. Now I did this across a number of accounts and ended up making about $500,000 that week. Now the following week, in a live webinar session just like this, I did a 4-day live webinar session. We opened on Monday talking about, how I thought the Nasdaq was going to go lower. I bet on the Nasdaq that Monday. By Tuesday, I was $24,000 lower. You can see that this stack of put options was down $29,000. I put up 61. I was losing 50% of my bet because the market went up against me that day. But by the following day, that $24,000 deficit turned into a $142,000 gain. That option series that was $30,000 in the hole was now $60,000 up. You notice that I had 450. And then by the following day, I was up 348,000, but you can see I already took some off the table. I reduced 450 to 150, so made over 100,000 in the sequence. So all in all, I made about $500,000 in that week. And all during this time, I was also short gold. You can see that I've been advising our members based on the same pattern that the Nasdaq shares. We find gold in the same pattern. It's called an ascending broadening price triangle, and it's a very idiosyncratic pattern. You don't see it very often, but as it happens, both the Nasdaq and gold were sharing the same pattern at the same time. And I loaded up on gold, added a second trade, and by last week I was up over $500,000 in gold. I since got out of one of the trades. I'm now sitting in the other, and we'll see what happens. So let me kind of go to the Nasdaq chart and show you what I was looking at the time. I'm going to start off with a weekly chart. And so what you'll notice is that I look at the longer time frames. I'm not looking at a 15-minute chart. I'm not looking at an hour chart. I'm not looking at a 4-hour chart, because my objective is to take larger moves out of the market. And you just cannot see those moves if you're looking at short duration price charts. So let me just scale this so we can see a little bit easier. So this is the Nasdaq right now. And when I was looking at it 3 weeks ago, we were resting within this ascending broadening price pattern. And it's called an ascending broadening price pattern because basically that's what it does throughout. Sorry, I'm just trying to get the right arrow here. So it ascends, and then it starts out life in the pattern narrow and then widens or broadens at the top. Now, with these price patterns, they often indicate a trajectory. And typically, I would have expected when this thing, broke here, that it would then indicate that trajectory. So, this is kind of the maturity, if you will, that I've had since I started this business, where, whenever I looked at these price patterns, and looked at my textbook and I say, well, it must mean something. It only means something if the market tells you it does. So what we've done here, and I'll go to the daily chart in just a moment, is we broke out of this ascending broadening. Let me kind of use a better color with more contrast. So we broke out and we're in the process of retesting. So we're at this lower end of the support boundary. Now we're really at an inflection point. So now if this thing is going to go lower, it should go lower right here. And so if the expectation is that it's going to go lower, it should go lower right here. Frankly, it's stronger than it is than I expected today. And, we could see continuing strength. And if it goes back into the pattern, then it could continue higher. So I look at how prices dance around. I put a structure around prices and look at how prices. So like I said, what I'm trying to do is take a piece of the middle of, moves like this, where the Nasdaq dropped from 14,000 to 12,000, a 15% move, and take a piece out of the middle. Actually, what I sold, or I bought my puts right here, and I covered my puts right there. So I took like 80% of that move or 90% of that move. And that's what I'm trying to do. I'm trying to look at, bigger moves in the market, 10, 15% moves. And on leverage, it can work out to extraordinary gains, as you just saw. And so we are now at the moment of truth, where if this breaks higher, it's going to continue higher. On the other hand, if it stops here and starts reverting, it's going to come back lower. And so the way I kind of view these things is in the, I look at how something closes relative to the high and low to put me in the direction of a trade. So you can see that basically sorry, I just like to rescale it so you guys can see it better. It takes a few moments. So, the Nasdaq has really been adhering to this long-term uptrend line. And all it really did last week was really come back to it. Now, what I like to do to see if something's going to, hold or whatnot is actually look at the price action. And what I mean by the price action, you can see that all along here, the Nasdaq made a new low, close on the high, 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 made a new low, close on the high. And last week it did the same thing. And maybe I should have, taken that, to the bank and looked for something like this, because every time we've made a new low and closed on the high off of this trend line, we've gone and made a new high. And perhaps that could be happening right now. The reason why, I kind of thought that we may be at a turning point was because I saw a combination of this, trying to find some trend line. So you can see that here is the ascending broadening price pattern now on the daily. So typically when something breaks through here, it usually returns to the beginning of the pattern, which would be right here. So frankly, this was my objective. It came just shy of it. And I don't know if we're still going to return to it. Frankly, tomorrow will tell me a whole lot, because you can see I call this the zone of opportunity, where we're just a hair away from either being rebuffed at that support level of the lower ascending broadening thing, or if we start coming back into this thing, then it's likely that we're just going to keep going higher. Now, there was another pattern in addition to this. Let me just clean all of this up real quick. In addition to this ascending broadening price pattern, there was another pattern that was a bear price pattern that revealed itself. And for the time that I was in the trade, it looked like it was happening. So this is a head and shoulders price pattern. Now, head and shoulders is exactly what it sounds like, where you have, this is the left shoulder. So it looks just like a man or woman's left shoulder. The peak is the head, and this would be the right shoulder. And when you come through the neckline, that basically confirms that it's on. But you can see that very often what prices will do is they'll break the neckline as this does. People will get all excited, and then it will retest the neckline. Now, typically, if this is good, it shouldn't come this high, and it should look like that. So if this head and shoulders is going to be valid, prices shouldn't be going higher. So once we see a bear pattern, then the pattern should then go according to the trajectory. And frankly, when it doesn't, then basically that just tells me that it's going in the exact opposite direction. If something can't go down, it's got to go up. And so this would be called a busted price pattern. So if tomorrow we start going higher and we start going, north of 320, 325 on the Qs, and we start going like this, then the implications of this bear price pattern will no longer be in force and effect. So we are at really a true inflection point. And so in addition to the pattern, I also look at, what I call my insurance day bars. Now, an insurance day bar is either a key reversal where you can see you made a new low and close on the high. And perhaps, I should have been more attentive to this, that this is the trend. It's still an uptrend. It made a key reversal right at the bottom. This is actually where I bailed out. Now, I bailed out there just because my options were expiring. So the QQQs got under 300. I made a ton of money. I got out and, I was kind of forced to play well. And then, I thought that, we would go up and then have a second attempt. But by virtue of today's action, I'm not so sure. So what you can see going on here is a coil, a series of inside day bars. And what I mean by an inside day, you can see that the range of today from high to low sits within the range of Friday. And actually Friday sits within the high and low of Thursday. So the last 2 days, the range from high to low of Friday and today are inside the trading range of Thursday. So now what does this mean? So, I kind of call this a beach ball effect, where, picture, if you will, you put your hand on top of a beach ball and you suppress it deeper and deeper underwater. And then you let your hand off. What happens? It just uncoils, right? The pressure just unleashes. And so this is what this represents, is that, these days are just like the ranges inside each other. They're just kind of building and building. And now they're going to uncork in the direction, of, either this bear pattern or the trend. So, there's kind of like a scramble here between, here's the uptrending line, here's the bear price pattern, and now we're really at the moment of inflection. And if tomorrow, we start uncorking to the upside, then, it's likely going to go and make new highs. And so we really are at an inflection point. And I thought, because of the ascending broadening price pattern and the head and shoulders, that we were going to break lower. And, that may happen. If we start trading under today's low, or certainly under last week's lows, under 310. So if you see the QQQs, which is the ETF on the Nasdaq, start trading at 310, that would be your cue that we're probably going to go back lower. On the other hand, if we start taking off, tomorrow, it's likely that we're going to, uncork higher. So, we are really at the zone of opportunity where, it's going to go one way or another. Now, I've been fortunate. I saw this reversal at the top of a head and shoulder. So just to kind of put it all together, what I look for is either a trend, to get in sync with the trend, or is there a pattern that indicates there's a reversal of trend? And, again, right at the top here on both the weekly and the daily, I started to see that we were at the top of this ascending broadening price pattern. And then, once I see a price pattern, then I just don't, go willy-nilly into the market, randomly. I wait for a bar, what I call an insurance day bar. Now, this is just something that I've coined, and the insurance day bar, to my mind, can form one of two things. One is a key reversal. So what is a key reversal? This is when the market makes a new low and then closes closer to the low. So it doesn't have to be on the absolute low, but I think visually we can see that, this is, this right hashtag, which represents the closing, is in the lower quartile of the bar. And when we see the combination of a price pattern, in this case, what I thought was a reversal price pattern, a market that was going higher, that looked like it was going to be thrown in reverse by virtue of the pattern, then I look for a day like this, or what I call an inside bar, which is exactly what we've seen the last couple of days. So, and it can be the opposite also, where if you're looking at a bottoming pattern, you make a new low, you close on the high, then these bars within certain contexts point to where the market wants to go. But the market will give you all kinds of, mislooks. So you can see there was a key reversal right here. And so you can't just fire at every reversal and think, well, it's going to come off. And maybe it was. And, you can see, that the market just never responds to that reversal. So it's kind of very subtle how you identify these tops and bottoms, or how you distinguish one from the other. But right here was my first clue, where the market made a new low and then made a new high. It made an all-time high for the Nasdaq right there, and then closed on the low. Now, it doesn't look like much, it's subtle, but at the day that the Nasdaq made an all-time high, it closed on the low. Now, this is where I bought my puts, right here, where you could see that we had this inside bar. This was on Friday, February 19th. And, it's always better to buy in strength when you're trying to, short a market, you get a better price. So when the market was heading higher that day, I started loading up on the puts, and I owned those puts, going into the weekend. And then you can see Monday it fell out of bed, Tuesday it fell out of bed. I got out of my puts and said, thank you very much. I made 600% on my money. and then waited the next week, where you can see that we did the same thing. We had this inside bar. You can see that this range was inside the previous day's range. And so sorry, where am I looking here? This guy here. You can see that blue arrow, that bar, the trading range was inside the previous. So I surmised that this was, we had broken through the ascending and we were going to have another flow through to the downside. And that's exactly what we had. And so now you can see that we are very close to this breakout area. And if we, kind of go back in here and rebuff it, then it's probably going to go higher. On the other hand, if we hit here and go lower, that's what's likely. Now, let me just put this in context. So there's been a lot of instruments that I've made just a ton of money trading with, through the prism of the same trading pattern. And again, this, I think, shows you that, it doesn't matter what you're trading, that these patterns show up on all kinds of trading instruments. So let me just make this a little bit bigger. So in this case, this is a currency. It's the British pound versus the Australian dollar. And this was, like 6 months ago, where I made just a ton of dough on the same trading pattern that we've seen emerging, or perhaps emerging, in the Nasdaq. And this is what gold has been trading through. So again, you can see that it's, an ascending, broadening price pattern, because it starts out narrow and then it ascends or broadens out at the top. So so now you can see the contrast in behavior, and I'm going to show. So it's very nuanced, and perhaps on the first day it's a little bit too much in the weeds to dig into. But like I said, what I do is I draw my structure, and then I see how markets behave in the structure. So if we bounced here and then bounced off here, I would have, gone with that. And I'm going to show you how the Nasdaq did exactly that. So you'll see how the pattern behaves on two different circumstances, where in this case, the market put on a double top here. I actually started getting short up here on this double top, but certainly here, this is where it was verified, confirmed, when the market started to break through the bottom supporting line of this ascending. And you can see that, just like the Nasdaq, what occurred was we broke through and then we retested, and you can see we came exactly to the area where we are right now with the Nasdaq, and then it failed. So this is why charts are a great reference to see how prices behave under the same chart pattern. And again, I ultimately defer to the market because it won't always, behave the same. So in the case of the Nasdaq, we could have bounced and come through, and if we start coming back up, then it could have another reattempt at the high. So it's very important now how the Nasdaq behaves here. Does it get rebuffed, or does it go back in the pattern? But this is just a great example of how an ascending, broadening price pattern behaves when it actually breaks out. Now, once it broke out, I knew exactly where my take profit was, because prices in this kind of pattern always return to the base of where it started. And you can see when I got short at 195, I said to our members, this is coming to between 175 and 178. And it probably got a hair under 175. So this is just your reference of how an ascending, broadening price pattern might work. And this is exactly the juncture we're at with in the Nasdaq. So if the Nasdaq starts going up tomorrow and starts failing right around where we are now, it will give an indication that we could be getting turned back. On the other hand, if it doesn't fail, it's likely going to go higher. So that might sound like I want to have my cake and eat it too, but that's just the markets. What I do is I draw my structure around markets, and then I look to take a big chunk out of the middle. I'll get to your questions in just a moment. Let me just get through one part of this presentation, and then I'll take the questions. So now I want to show you another, same kind of thing. This is XAU USD. This is the ticker symbol for spot gold. And I started, indicating or suggesting to our members that they start shorting gold in the mid 1800s, or actually in the mid 1900s. So you can see that, it kind of looks random. It's gone up, it's gone down. And so what I try and do is put structures or boundaries around prices that I can kind of understand the context, the movements. And then I look for certain indications within the context of that. Now, I will say that I called this thing unbelievably because right here, I was long gold. Our members were long gold throughout this whole run, on a breakout from an inverted, a double bottom inverted head and shoulders price pattern. But right at the top at 2100, I said, I think it's time to get out of this market. Let's stand aside, see how it goes. If it goes higher, then, so be it. And, it wasn't just a guess or whatnot. It's like been my experience that when the volatility starts expanding, and what I mean, the volatility, if you look at these, now these are weekly bars, 1 week in time. And you can see that the range of these weekly bars was about $100. But you can see preceding that, it was very orderly, very small ranges leading up to that expansion of volatility. You can see that, very calm, got volatile in this thing. And then the volatility started to expand right here. And so it's just typically my instinct when, things start getting out of hand. And I'll show you how I shorted GameStop last week, because, to my mind, the volatility's gotten out of hand. There's some price patterns there, and I didn't want to play in that. It's a dangerous place to play, but I just couldn't help myself. Upon, notices. So once I understand a pattern, then I look for what I call my insurance day bars to get me in the momentum of the pattern. So once I understand this thing is going lower, I wait for certain bars to then tell me where my risk and reward are. And you can see right in here was a key reversal, made a new high, close on the low, and then you had an inside bar. So you had a combination. So you could have just snuck your sell stop under here at 1850, and it went down to 1750. You made $100 just on that. It doesn't look like much on the weekly chart, but this is what these signals look like. Now you had a second key reversal. You made a new high, close on the low, and then you'll notice that it was right within the context of a double top right in this area at 1950. So you went to 1950 twice, got rejected twice, and then I look at the quality of the bar. What happened here? And you can see that it made a new high and then closed on the low. And that to me, and when the bigger the bar, the more indicative, of the quality that bar is. So within an ascending broadening price pattern, I now had a double top. I now had, my key reversals. And now I was looking for ways to get in so once you kind of get a feel for what is the trajectory, long term, I don't mean in the next hour, remember, I'm looking to take a piece of the middle out of moves like this, $150, $100, $80, whatever it is. And you can see right here, this is where I kicked it off. You can see there's an inside bar there, that the range of that week was within the range of the previous week. And so in my weekly, email, I said to get short here at 1841. And then I will look to add to my trades. And so you can see the very next week we had another, or 2 weeks later, we had another inside bar. So the first thing is, identifying where is this thing going, and then looking for a certain price action to get me in. So, and then I layered with an execution that requires the market to confirm what I'm looking at. So in that case, it was at 1797. And you can see that earlier in the week, the prices went higher. I wasn't watching my screen, and then it collapsed through there. And then 3 weeks later, it was much lower. So now you can see that we're close to the lower end of the support area of gold. And then last week, we made a key reversal here, made a new low, close on the high. And so, to my mind, this will, provide some momentary support, but I still think that gold will likely go lower. So I wouldn't be surprised for gold to come back to this breakout area around 1750 and then perhaps reattempt that. But, this key reversal indicates that there is, somewhat of a support right here. I wouldn't buy it, but this is where I'd start, where I start taking some profits off the table. So I look at, price action to put me in the market as well as to take me out. So Vivian says, what do you think about the monthly chart for the Nasdaq? Are all those candles indication of a bearish move? So Vivian, good on you for asking about a long-term price chart. So I toggle between the monthly, weekly, and daily timeframes to kind of get a picture of what's going on here. And actually, this is gold, and you can see right here gold. On the monthly, we made an all-time new high, but by the end of the month, we closed, under the last month's close and reversed. And then you can see that there are a set of months here where we made new highs, and by the end of the month, we close on the lows. So you can see that even on the monthly on gold, and I'll get to the Nasdaq in just a minute, Vivian, it's just once I was here, we've kind of got this ascending, broadening price pattern on the monthly. And you can see how on the monthly, how it's not a mistake that the weekly reversed here, because we're hitting right at the support level. So now the question is with gold, do we come here and go up here? Because this is what the Nasdaq did, and I'll show you in a moment. Or if we break here, does that mean that we're coming all the way back to the beginning of the pattern? Hard to fathom, but this is where you objectively have to just look at the charts. You're not going to find out on the BBC or the news. Now, the reason that makes me so bearish here is that all of these reversals, on the top, make this seem now very heavy and, likely to now result in a move lower. But I could be wrong. I mean, if we grab a foothold, right around here where we are, this could be an area where now, things start. But, I will observe that, markets that go straight down, they don't just go straight up like that. You won't see another monthly bar that just goes straight up. So this will require, some kind of, maybe we see a couple of these things, some kind of bottoming action that might take several weeks to occur before we kind of get going again, if we are. Right now, looking at this thing, I'm still, in the bearish camp. I still think that, we'll end up going lower. But, we are at the moment of truth. We're right at the lower end of the support line. So there was no surprise that we ended up getting some support right here. And so you can see we're in a major area where you had a double top here. And so this is an area of resistance. And now it just may take, a while for us to consolidate. And if this just stuck here and just consolidated, and stop going down, then there may be, a chance for it to going higher. But to Vivian's point, Vivian asked about the monthly on the Nasdaq, are the reversal. So you kind of have a tug of war where, we haven't closed this month yet, but yes, you did have a reversal last month. But this is why I said you can't really just, trade reversals in a vacuum. You can't just say, well, there's a reversal, I'm going to short it. You can see there was a reversal right here. Yes, it lasted. It gave you a nice move, but it was right back in your face again. So yes, we had a reversal the month before last. And typically, when you see a top, it takes a couple of, bars to make a top. So you may have to come back here and do this again. So we may be, at a top or, not at all. I mean, this thing is just, just showing that there's reversals, all the way up here. So this month we made a new low right at this, upward trend line. And right now, we're at the high end. Now we're only in the middle of the month. So, and this is a monthly bar, so it's a little bit early to tell where this thing will close. And this is why, I rely on the close, because, it could look like this now. And, if it looks like this at the end of the month, it's going to be, two different things. Right now it's trading here, and if it's trading there, it's going to be two different pictures. So we only have one reversal. And typically, to have a top, you want to have multiple, attempts in a certain area before you can say that something is, going to roll over. So we do have this key of reversal here, which kind of gave us this down move, but you can see now it's just kicking back in the direction of the trend. And tomorrow is going to be, really important as to which way this thing wants to go. Like I said, we've got these inside bar coils, and how this thing uncoils. This is a duplicate, by the way. When you see these two bars are the same, it's just the way this chart service does this. It's the mirror image of the same day. So how this thing uncorks out of this, you can see we've actually had 3 inside bars. Actually, I shouldn't say that because today's a duplicate. So we had Friday and today are both with the, inside. But, this guy right here, this key reversal is kind of pointing in the direction higher. So look, I've been looking at this chart right here. And to me, I always say, trade the picture, trade the picture. So this is what I've been looking at. But, if we start coming above this, right shoulder, then all of a sudden it's gonna bust the implications. So whatever, this looks like, if this is a head and shoulders, and when we see a bear pattern, then the market should go consistent with what the pattern is indicating. If it doesn't, then the pattern is being rejected, and it's called a busted trading pattern. And so we're throwing patterns all over the, place. And so now as traders, we have to figure out which are the good ones and which are not the good ones. And frankly, when you see a reversal of this size, made a new low, close on the high, it does, signify that there is some strength here. So like I said, we are at the moment of truth, and we'll know this week where, I thought I saw 2 price patterns here. And so it's still possible for the Nasdaq, like the pound Australian, where it went to the lower, support line. This is what, around 13,400, about another 300 points in the Nasdaq. And so it's either going to do this or it's going to do that. And so we're getting, very close to some, inflection point. So Jay-Z says, can you explain when you say the market is a discounting mechanism? So to my mind, the market is ahead of the news. So for the last several years, Brexit has been an overhang on the Great British Pound, right? Since 2016 or whatever, we've been hearing about Brexit. Now, we recently just resolved the Brexit, where the EU and the UK figured out terms of engagement and whatever. And I don't remember when that happened. It was somewhere here or here, or maybe you guys can tell me. But the market was already anticipating what the outcome of that Brexit negotiation was. And it formed a pattern way before that resolution was indicated. Maybe you guys can tell me, look up when it was actually ratified. It was only like a month or 2 ago. And we're in, April. So what am I looking at? Yeah. We're in March here. And so, Brexit was, kind of resolved somewhere in here. But the market already started bottoming around 115, 2,000 or 3,000 handles, before the outcome of Brexit was even known. So the market is a forward-looking mechanism. And if you're looking, okay, the announcement of direct Brexit comes out here. The big money's already been made. The smart guys started getting in early, or the market started to tell you that it was turning a lot way before Brexit. And so, to my mind, I just look at patterns. Here was a beautiful double top with a key reversal and kind of gave you a 4,000 pip move. So all I look at are these patterns. So you kind of have this now, this double bottom, inverted head and shoulders. When you broke through the 135, that was kind of like the breakout. Now, you could have like kind of a break back to the breakout area. So very often people, markets will break out of a neckline and then retest, that neckline. And then if it goes, then it's good. And so that's why, to me, it's an open thing, whether the Nasdaq is retesting the bottom end of this ascending mechanism, the broadening pattern. But even on the Nasdaq, and this to me is just, the amazing thing about the markets. So here is the ascending broadening price pattern on the weekly chart in the Nasdaq. And it's just amazing to me. And, I've been trading many decades and I'll never get over how magnificent price action is. How could you ever anticipate it through? I mean, this was back in 2016. We made a low here and then connected the second low. And then it looked like the markets were lifting off and ready to go. And then you return right back down to that support line. But I mean to the millimeter. So you had a global pandemic, something we haven't seen in 100 years, send prices exactly to that support line. And then the action along that support line was exactly the same as before. Made a new low, close on the high, made a new low, close on the high, made a new low, close on the high. And that indicated that. So now this was also at the time an ascending broadening price pattern. And so this is why I show you the contrast between how an ascending broadening price pattern in the case of pound versus Australian dollar went that way. And in the case of the Nasdaq, it went that way. So you have to see what prices do, at these inflection points. Now gold is right here at the bottom end of an ascending broadening price pattern. So now it's an open question. Does gold do this or that? And once the market starts going, we understand. And then you can draw certain inferences and then use, my inside bars, my key reversals to get in the direction of a trend. And you can see even along here, you have this huge ascending trend line where every time it hits along here, which it did last week, it goes higher. So now it's an open question whether it's going to, do the same thing here or start failing. Right now, it looks like it wants to go higher again. So Rajpal says, what is the time frame you usually hold a trade for? It's really not up to me. I look at the size of the pattern, and then I make a determination about what is my vision as to where, that trade can go to. And I think the best example of that is, I've been trading the eyeballs out of the dollar yen for years. And now the yen charts are also at a point of, huge inflection, where inflection, I mean, a huge opportunity one way or another. So for the past several years, I've been shorting into strength, in the dollar yen. Now I've been, buying the lows and doing some other, what I call counter trend moves, but by and large, I have been, shorting the US dollar versus Japanese yen. Why? Well, all based on a price pattern that I saw 6 years ago. So you can see right here, this double top. And a double top is exactly what it sounds like. It made an all-time new high, went to 126, backed off the high, rechallenged the high. When it came through here, it formed this M top. And with the word top in it, it said that the market was going to go lower after the market topped out. And so that's exactly what it did. It went from 126 to 100 over the course of 5 years. Now, in this time frame, you also had this head and shoulders. So it looked just like a man or woman's left shoulder, head, right shoulder. So now this is what I call a governing price pattern. So collectively, you have a double top head and shoulders. So now this is my cheat sheet. This is like my trading for dummies. The problem is if you're looking at a 15-minute chart or a 4-hour chart, you're never going to see something in your rear view mirror that happened 5 years ago. I've been trading off this chart for 5 years. And now the question is, where's it going to go now? So, the pattern reveals itself. The pattern then yields a move. And then the market, makes new patterns and goes off in another direction. And now the question is, are we going off in another direction or are we going to revert back in the trend? So for many years, it's been very unfair. It's been like shooting ducks in a barrel. Every time this thing, came up to this resistance line, I just shorted it. So you could see what was happening. This was a pattern of lower highs against a common low around the 100 to 102. It's called a descending wedge triangle. Now it's a neutral triangle. It's if it breaks out to the downside, it's bearish. If it starts breaking out to the upside, it's then going to be a continuation of the former move. So now it's an open question. Are we at this? We're at this inflection point where we've somewhat broken out. Now, sometimes you can get these, bull traps where you chase this thing and then it goes back this way. And so it's still an open question in my mind what this thing wants to do. And so I'm just going to, watch the price action to let it tell me. And I might have to miss a portion of it and wait for an inside bar or a key reversal or something that puts me in, a closer to a risk reward trade. But right here, this was April of 2019. So to the question that was just asked, how do you, anticipate the move of a trade, or what do you look for, or what's your take profit? And actually the trend line on this was a little higher. So if you connect all these lows, it's around 104. So when I saw this double top right here, within the cadence of a descending triangle, after seeing this double top, anticipating that the market was going to go lower, my entry was right here. And it's hard to see on this chart. This is really small. There's a bar right there. It's the narrowest bar that I've ever seen, for the last 10 years. That actually is a weekly bar. And that weekly bar was 50 pips. Now, it's just my experience that these narrow range bars, these inside bars, they look benign, they look innocent. But what it represents to me was that this market, after rising, started stalling out. It just couldn't make a new high. It had this inside bar. And so what I did was I sent out an email to our members to short it there at 111.61, right under the low of that inside bar. Now, why don't I just go in, I don't go in at the market when I see something, because you can see in the following week, I'm trying to find a color that's going to, we kind of went higher. So my email went out on Sunday to sell at 111.61 stop. And if the thing had just kept going higher, then I would never be filled, and no harm, no foul. But I require the market to confirm my analysis. And you can see from Sunday through Wednesday, this thing started rallying, made a new high for that move. And then like Wednesday night, triggered me into that trade, and then I never looked back. And I was in that trade for 4 months. And I held out for this low right here. Now, why did I hold it? Because I thought, and I was saying to our members at the time that the market was going to return back to those lows. And so, once I see these patterns developing, then I develop, a kind of a vision as to where the thing needs to go based on, certain observations of where we are in the pattern now. At each juncture, you're at, different point. So right here, I started to say, look, the air's been left out of the balloon. It's like difficult to short it right here in the lows, especially when, you have these support areas historically. And you could see this was like a trap. It just couldn't, it's like a water on, like pressing down on that beach ball. You press, you can't get it down any further. The market is like that. It's like you're pushing, and then the market just exploded the other way. And so now that it's an open question to me, as to if we're now in a new paradigm shift where, the yen is going to start weakening, it's been strengthening for decades. Is it going to start weakening, or are we going to go back in the direction of the trend? And I kind of think it's the latter. I kind of think that we're going to kick back in the direction of the trend. Now, you won't find this written in the textbooks. There are no rules. But frankly, I just feel, the laws of, the markets are such that, the market doesn't give you, umpteenth opportunities to buy something that is going to be a sustainable rally. The market doesn't give you 5 years and 10 chances, to buy something that is going to be sustainable. Now, look, there's no rule. I might be completely wrong, but I just have a visceral feel that we're going to come back in here. And so I'm just going to be watching the markets here to see how that goes. And so, you can see if we kick to the monthly, that it's a question now, are we going to continue in the direction of this long-term trend? So you can see now we're really at an inflection point. And to me, these are zones of so much opportunity. So the timing of this webinar is, couldn't be better because there's going to be some real opportunities, in the Nasdaq, in these yen pairs. So you can see now how we're trading right at this, area, this inflection point along this long-term symmetrical triangle. And so the question is, are we going to go back in the direction that this, first came, or are we going to, reverse back lower? And, the quality of these bars looks such that, I have a hard time envisaging, now that the market's going to come back against this. So we'll just have to see. I'm really on the fence. I could make a case either way. And so whenever I have this ambivalence, I've learned just for myself that if I'm unsure, if I get long now and the market goes down, now I can all of a sudden, start picturing the other side coming in. Or conversely, if I'm short and it starts going higher, then I'm thinking, well, the others. So I know better than to, get in something where I'm still not sure. Like 3 weeks ago, I was absolutely sure when I was getting in the Nasdaq, just because, again, like right up here, when you have a huge range and you make a new high and close on the low, now, you may not be right about catching this term, but at least you can put a risk reward. If I sell here, my risk is there. And that's what I did in the Nasdaq. And I thought it was good enough. But right here, we're kind of in the middle where anything can kind of happen. So what I what I do is I kind of wait for, something to help me resolve my ambiguity. So I'll wait for, a certain date, and this is, remember, is a monthly chart. So this could be, let's say, a monthly bar where I have an inside bar on the month. And, if I'm looking to, sell it, I put my sell stop under the low of that month. If I'm looking to buy it, I'll put a buy stop. And, in this case, you could probably put both and, let the market kind of confirm this, for you and leave both of them in, because I've often learned that, if one doesn't work, the other one will. But what I do is I wait for an opportunity, one bar, a way to, assess my risk. I mean, or on the other hand, you could buy it here and, put your, make it somewhat arbitrary, but have some way of setting up your trade. And so what I look for is, setting up a trade where I understand the risk and I also understand where and how to get in the momentum of a trade. Let me just look at a couple of things to see if there's anything today going on. So all of these yen trades, you can see they're starting to, have a little resistance up here, which is normal, but the momentum is still considerably higher. So I'm just trying to look for a trade that, I would set up on a risk reward today. So this is the euro. Okay. So this is the euro versus the US dollar. And frankly, I don't need any more time than this. So, I'll first look at my, daily charts, then the weekly, then the monthly. But I do all of my homework over the weekend. So, I kind of know where the resistance is. So this looks like there's, a looming pretty big double top resistance level building in the euro. Sorry, let me leave that up there. And we recently cleared under the neckline, which somewhat confirms a break. So a neckline is simply a line drawn through the pattern. And so now you can see that we have a series of inside bars where the ranges are one inside the other. So we have this coil. And now I'm trying to surmise, where is this going to uncoil out of? And by virtue of this double top bear price pattern and the break of the thing, I'm surmising that we're going to have a break lower. And so what I would do is I would sneak a sell stop under the low of today. I require the market to confirm what I'm looking at. So let me just quickly go to the euro. The low was 119.10 today. And the high was 119.67. So basically, this is what I would do. I would put a sell stop under there. I put my stop loss here. This would be my risk. And I would look for somewhere, somewhere down into the support under 116. So you can see that I've got a 300 to 400 pip risk for a 300 pip reward or outcome for a 50 or 60 pip risk. Now I'll do that all day long. If you can set up your trades with a 3-to-1 risk reward, and what I mean by 3-to-1, I mean that if you take a 50 pip risk and you have a 150 pip outcome, in this case, I think your outcome would be even bigger, but in this case, that's your reward is 3 times your risk. And if you set up your trades like this each and every time, you can actually lose 72% of your trades and still be a winner. So, when I was managing money, or even now, people ask me, well, what's your winning percentage? And if I tell them like 40%, I win 40% of my trades, they'll just say, okay, ciao, I'll see you later. I'll go to somebody else. But when you see that I made $1 million on one trade and I'll lose, 8,000 on one or 20,000 on another, then I could lose 20 trades. I could do 20 of those option plays that I did last week and lose all of them and still be ahead. So this is what I look for, where I can kind of understand. So here you have a pattern. So let me get rid of all of this stuff. So I start with a premise. What am I looking at here? So, most people, they open up this chart and it looks, random. It looks somewhat ambiguous. What I try and do is make sense out of it. See that there's a structure here. So I can see what looks like a double top price pattern. I may not be right. And like I said, if I lose on this trade, big deal. But then once I understand my pattern, the direction I want to be in, then I wait for a set of bars that I can understand where to get in, where the momentum will pick me up, and understand where my risk is. Now, like I said, I don't have to get each one of them right. But to me, this is the holy grail of trading. If you understand which way to be faced and what your risk is, and if you've got a bigger outcome than your risk, and you do this every time, you'll be a consistent winner. But what most people do is they will take an individual bar like today and trade in and out 5 or 10 times a day, looking to scalp 7 pips here and 5 pips there on a 15-minute chart, trying to play chicken with their broker. So, if you're trying to make 15 pips, you have to risk 15 pips. You also have to pay the 2 or 3 point spread to overcome. And so you only have a 1-to-1 relationship, and then you have to win 90% of your trades. Versus I showed you, if you take a 60 pip risk and look for 150 pips or 300 pips, you'll be a much more profitable trader. So I look, to take pieces of the middle. So, if I see a move that's going from here to here, I want to take a piece of the middle out of that. Maybe I'll take all of it. You know, I'll wait till it comes back to the support. And so this is the premise of my trading. I look for a structure, then I wait for a set of, bars, key reversal inside day. So you can see right at the top here, when this thing was making the second peak, while it doesn't turn red, you can see that we made a new high and then we close on the low, right at this resistance point. So when I see that, and you can see it was also a fairly large bar. So the bigger the bar, the more veracity, the more integrity that bar has in telling us where it wants to go. And so the first thing is to understand, what is the trend? If there is no trend, is there a pattern? Once we can see that there is a pattern, then we wait for a set of bars, a key reversal, an inside bar, and then we layer it with an execution strategy that says put a sell stop right under the low. And guess what? Tonight we open, we go this way. No harm, no foul. I'll just cancel this pending sell stop by the end of tomorrow and go and find another trade. So I did mention that I was in GameStop. Here's actually my trades. So today I shorted Zoom at 347. And last week, I just couldn't stand it anymore. I mean, I wanted to short GameStop, but obviously this thing was swinging, 50%, 100%, not in a, not even in a day, in an hour. And so obviously if you short the stock and it goes to $500 on you, you've got unlimited exposure. So I've been looking at this thing for a while. This thing just is insane to me. You've got a double parabolic market. At some point, anything has to come down to its intrinsic value. And so I kind of had a hard time thinking what I wanted to do with this thing. So if I bought out of the money put, so this expires this week, March 19th, and I put these on last week. Now the difficulty with GameStop was if it, first off, you pay so much premium. So if you're looking to short the, buy the 250 puts, you could be paying, $70 for it. So your break even is $180. And then if it doesn't get there, then you lose all of your money. So what I did was I bought well in the money put. So you can see I bought a 340 put. So this stock had to go all the way to $340 to take all of my money. And then by the end of the week, I saw that we had a key reversal and I bought the 310s again, far in the money. And when we say in the money, at the time, GameStop was trading at about $270. So that I kind of surmised that by the end of this week, I might lose something, but I'm probably not going to lose all of my money. And so it's a gamble, but, this is what, I did. Now, again, this is probably not the greatest example, but, this is when the market loses its sanity. So this is what I call a double parabolic market, where prices go parabolic twice. I've rarely seen something like this. This is like in Holland in the 1770s, tulip bulbs went, or the 1400s, tulip bulbs went for $75,000 each, if you can believe it. So you can see this stock went from $3 to $500 in 0.6 seconds flat. It went from a nothing company to a $24 billion market cap company overnight. And then it crashed down to earth, and I thought that was it. I was actually thinking about shorting it at 50, thinking that this thing has to go to 10 or 5. And I'm glad I kind of stayed out of it. And now you can see it kind of had another thing. So you've got this double, this double top. And so I bought these puts that expire this week. So, to me, it's not a question of if, but when this thing crashes back down to $10. And the problem with options is that you have to be right and then right now. But, I saw this kind of reversal right at, this rejection high or this, double top high. And look, I mean, you went from $40, up to $365 in, So this just makes no sense. This is just internal financial machinations where people got short and they had to cover. People had a bunch of call options that then forced people to cover their stock. So it's just a financial machination. But eventually, the value has to come in. And so I didn't know how to play this because obviously, if you short it here and it goes up to there, you're going to be you're going to be wiped out. And so I didn't want to be short the stock. So right around here last week, when it was trading around 270, I started buying, puts that had strike prices. Well, so you call it in the money. And so it's just a question of how far in the money this thing, keeps going, or, if it just, trades here, I'm at a break even, or I'm actually making $10. So my break even was around 240 bucks and it closed at 220. Now, I added to my position on Friday because of a reversal. We made a new high, and then by Friday's closed, we closed on the absolute low. And so these reversals, point in the direction that these things want to go. This was kind of after, it made this second top up here, and when there's just no sanity to this thing at all. I'm hoping one day, at one point this week, it just opens at 80 or something. SEC says they're closing it down or something, because this thing's not worth more than $10 a share. And so this makes no sense, and so there's just no sense to it. So I just took a shot at it. It's not really a teaching moment, but if you're looking at this thing, we had the double top, and now you've got these three inside bars. So actually, if we get through the low tomorrow, you're probably going to collapse even further. So if you really are again a gunslinger and you want to buy some puts or something like that, if this thing comes through the low, this is three inside days. They all operate inside the range 4 days ago. So you have this coil that, to my mind, is just going to uncoil that way. So look, it was just something that I had to do. I didn't, I was watching this thing for so long. I couldn't figure out what to do, and I just wanted to mix it up. So I bought some puts here. And then I also bought some puts on, I shorted the stock of Zoom. And, my timing, may not be good, but I think it's just a question of time. And I should have waited. Usually, I violated my own rules. So this is the stock of Zoom, obviously made video conferencing, very popular. But to my mind, you have a double top here. You have a head and shoulders. It's just like a man or woman's head and shoulders. So there's your bear pattern there. That's your governing price pattern. Now, look, it could still shoot up here before it goes down there. And, you've got a several day inside bar coil. So all of these days are one inside the other. Now, I should have waited. I went to the market. I should have waited. And really, the ideal thing is to put your sell stop, under that key reversal low several weeks ago, because this thing could still come higher and still go down. So, wasn't really a great transaction. I just, started to put a toe in the water, and I'm thinking, even if it goes up, I'm just going to, keep shorting into this thing, because I think it's just a matter of time. This thing's just treading water, on this shelf here, under this breakout area. It basically returned to the breakout area. And yes, we may go higher, but I think we're eventually going to go lower. But that was an example of a great trade. The sell stop should be under this low, which is, I don't know, 335 or something. But I am tentatively short. James says, how do you feel about cinema companies like AMC? I don't feel about anything. I just look at price action. So, I look at so this, this kind of looks like a double parabolic market also, AMC cinemas. And, but you just have to wait for price to tell you. You don't have to get ahead of this thing. It's like, it's unknown whether this thing's going to turn back here, or we go the high, we make a new high, let the market do all the work for you. So basically, I just let the market do all the work for me. And then I look for one of these days where it does one of these. So you could see right here, made a new high, close on the low, and then, it pointed its way lower. So I would wait for another one of these wherever it occurs. And then, I use these. So the way I use these is like an insurance. That's why I call this an insurance day bar, because it tells me if, we have a reversal like that the buyers tried to find where the level was and then got rejected. Then it closed right on the low and the sellers were in control. So it tells me that my risk is here. So if in the next day or week or whatever, I see it kind of snapping back, I just arbitrarily, would start coming in here, short it here, understanding that my risk was there, understand that's my risk. This is what I'm looking for. And, use something that I can justify, but I don't just wade in arbitrarily. Right now it's arbitrary. This price bar closed on the high, and it's who knows where this thing can go before it stops going. I mean, I do think it will crap out, and this thing will come back down to earth, and this will be, a $5 stock again. But, like with anything else, it's a question of timing. And you don't have to be a genius. Wait for the market to tell you where it wants to go. Hamed said, what do you think about Tesla's price action? Tesla's kind of in the middle of the tennis court for me. Which is probably not a really useful analogy to a lot of people, but with the you either want to be at the baseline or at the net. This is kind of in the middle where I could say it's going anywhere. I mean, the long term, just like the Nasdaq, this is kind of hugging this long term, and all it did was get back to this long term trend line, like it did with the Nasdaq. It does look like there is a double top here, which, if you played this, you broke the neckline, you made, night. And remember, I'm just looking for a pattern like this, and I'm trying to take a piece of the middle, right? This was a, 800 to 500. This was a $300 move. And if I can take $150 or $200 out of this, this is what I'm looking for. So now it's a question of, did we snap back here and you're going to go back up here? And again, you've got oil, you've got 3 days of inside coil. You've kind of got this, inverted head and shoulders going on here, which somewhat looks, but then you've also got these lower highs. So it's stabilizing here, but, it needs to kind of take out these highs, which I don't know where that is. Last week's highs was around 720, and these highs are even higher. So, last week's highs was around 720, and, we'll see. So you have a coil going on here, and now it's a question of, which way do you uncork? And, you could play it either way where, you can have your cake and eat it too, where you don't have to mix it up, put your sell stop under this low here. Like I think 670 or 690 is probably a good spot. And if it keeps going up, then you're not short. On the other hand, if you want to try and get long here above 620 and see, how this feels, I'm saying you can use price action to create risk reward opportunity, where you buy it here, you put your sell stop under here. This is your risk. That's your reward. Or conversely, you think this is coming down, you put your sell stop under here, put your buy stop there. That's your risk and that's your reward. Frankly, I think that's the better trade. I just feel like this thing's coming down, but I don't know. Some guy put a big price ticket on it last week. We'll see what happens. So, it's a little bit ambiguous trading zone. We still have kind of these lower highs. And so, if we start taking out and making higher highs, then this thing's, going to take off again. On the other hand, if we crap up, under today's lows, so it's just in a, kind of betwixt and between. But all I'm looking for is pattern, response, get out, reassess, move on, find something else. Can I talk about Ether or Bitcoin? I think, Bitcoin's at an inflection point remember, peaks don't have to be in the same area. So last week you went to about 56, 57,000. Over the weekend you went to 61. So now you're in this zone. Obviously, this has been a huge uptrending market. I mean, a parabolic market. So, this is like, again, this is like GameStop. When I see these parabolic markets, I don't know. It just feels like everything always ends the same. Every time it feels different, but I try and be unemotional and objective. My wife loves these things. I'm begging her to take some off the table here. I was in this thing. I missed it, and then I never got back in, to tell you the truth. So, here is, a potential resistance level. Now, we don't know if there's a resistance level and it's going to keep going this way, but what I would watch, and this is what I'm telling my wife, how to watch if this is a double top, is if it comes through this neckline, which is right around 45,000, a hair under. So this is what you want to watch. If you come back here, do one of these, watch out. Now you could pull back here and, it could then be a springboard, or it could be, so that's, I would just watch how this behaves in here, because you did make, and these peaks don't have to be symmetrical. And I was telling my wife this afternoon. So you have one higher than the other. It doesn't have to be symmetrical. If you look back and you get, this, and that looks like an M, then it's going to mean that. So we shall see. It's hard to analyze something that's gone straight up. Kenneth says pound New Zealand looks bad today. Pound New Zealand is just, I think, playing a game of hide and seek, where frankly it actually looks pretty good to me. So like I said, it helps if you look at the forest for the trees. So if we look at even shorter time frames. And you're right, this does look like it's starting to flag here. So I've been kind of up and down as to, which is the governing price pattern. So, like I said, when we're trading, we're trying to find a pattern that is going to govern or dictate the future trajectory of whatever we're trading. And all the way back here in 2016, 2017, when this made a double bottom, for years, I said this thing's going to go higher. And it did. It went 5,000 pips higher from that bottom. But that was then, and this is now. Now the question is, is this going to go back in the dominant trend, which is lower, or is this still going to be the governing pattern like dollar yen? I'm still looking at this area as a double bottom. I still see some price reversals here, made a new low, closing the high. But, this is starting to kind of feel like it's leaking power and kind of going back in the direction of the trend. So, yeah, it's, I would just, again, leave some, what I'm looking for is a market that goes like this or goes like that. If a market is kind of going like this, I'll just leave it alone. I'm not looking to trade sideways markets. I'm not trying to, gain 40 pips, every half hour. So this is just too difficult to handicap. This is in a trading zone between 195 and 190, and it's just banging both sides. And so, I don't want to have my eyes fixated on the screen, worrying that if I don't take the next 40 pips, it's going to be back in my face again. So I do feel that this is kind of a stealth bull market, but it's taking its sweet time. And, even at the time I said it was going to turn around, I said it was going to take time, because markets just don't go straight down and then go straight up, just like I said on whatever market we were with gold. So this has been going down, and this could be turning around, but it could be taking fits and starts. So I've got one eye open on it. Look, if it started taking out this low under 190, I think it's rolling over. Until it does so, it could do anything. So I don't really like or trade range bound markets. So it could do that for, who knows, several more weeks. So I got one eye open on it. I still think it's going to go higher, but it does look kind of like it's leaking power right now. So I'm trying to think of, the charts that I'm thinking that, right now, like I said, the yen pairs are in the process of turning. The euro pound is also, I think, at some inflection point here. It's at a very interesting point. So again, this is where sometimes it gets a little bit ambiguous as to assess which is now the governing price pattern, which is the price pattern that's going to, now typically the euro pound is such a range bound pair that I'm not normally looking to trade it. But just like I said on that dollar yen, sometimes these little narrow range bars, they could be zones of opportunity. So I've been kind of looking at the prism that this is going higher because this was the governing price pattern, this double bottom or even triple bottom. Once it took off from there, it kind of directed prices higher. And then you had this interim double bottom that then stabilized things, and then things, just hit resistance and it came off. Now the question is, where's it going to go from here? And so this again feels like that dollar yen, feels like a beach ball underwater where you have 2 and now even 3 weeks with these very small, narrow ranges. All of these ranges are inside this guy here. So, it's going to be very interesting to see. And if this is the total range for the week, which, I mean, this is the first day of the week, so I'd be surprised if it is. But if that's what it looked like, I would be very excited about that, because I would simply just put a buy stop, on the high of this thing and watch and wait for one of those explosions. Now, I mean, this could still leak this way. So I'm very interested to see how we, kind of sort this out. But you can see that these narrow ranges, that things are becoming more and more compressed. So, it's either going to come out of here with a burst of energy or out of there. So the more and more you compress, the more you're going to shoot out of, a certain space. And so this has been in a stealth bull market. You can see that we're hugging this trend line just like the Nasdaq, and we're just at a zone of support. But again, like now, and this is what I do. I do a lot of visualization techniques where I kind of say, okay, this has gone like this. Can I see it going like that? Can I see it quickly going up against this profound downtrend? And I'm not sure I can quite make the case, but I'm going to kind of keep my eye on the radar, and we'll keep revisiting it. Trish wants to know about dollar Canadian, and then I'm going to end it here so we can leave some suspense for the rest of the week. Again, what I'm trying to do during our time here is just show you the methodology, how I use trends or patterns and then price action to set up a risk reward opportunity. So when I open up something like dollar Canadian, this is the weekly chart. I just see this very large double top. It double topped a long time ago. And, when I was watching that second top, I was also watching this descending triangle. And then when it broke under here, this was my confirmation to get short here. And, this was giving me confirmation all the way down to short this thing. And then you also have this head and shoulders here. And then you confirm that by breaking through this neckline. So everything about this pair suggests we're going down. Now we're, close to, some level of, first level of support's around 123. The next level is under 122. And then this thing's, got a lot of white space underneath here where it just feels like this thing is just going to get cratered. And so once again, what I look for is a direction. So the direction is clearly lower. Is there a pattern? We have a head and shoulders bear price pattern. Then once I understand which way I need to be facing, so we have a direction that's going lower, a bearish price pattern, which means prices are going to go lower over time. Then I try and get in sync with the trade. Find those bars that put me where I can understand the risk and reward. So right here is an inside bar. You can see the high and low of that week sits within the high and low of that week. And so basically, all I would do is put my sell stop here, and now you're in the trade, and now it's down here. And actually, a couple of weeks ago, you had another inside bar. That range sits within the previous range. All you had to do was put your sell stop underneath the low of the range there. And now you're sitting in this trade. And now, your first level, of profit objective would be around, 123. And then, probably, much lower thereafter. So again, it all comes down to the same thing. I don't care if I'm looking at GameStop, the euro yen, pound versus New Zealand, direction, pattern, look for your price action, put your execution order in, a buy stop if you want to buy, or a sell stop if you want to sell. And it sounds simple, but it really is. And again, what I think it does, what it takes is a bit of a reframing. So the question is, what is your, you have to start off with asking yourself, what is my objective in trading? And that's a very serious question, because if you don't understand that, then you're not going to understand why you're doing what you're doing. And most people say, well, I'm in trading to make money, of course. But is that the real reason? I mean, is it not for the bump, the rush, the action, the in and out? What if I told you that, like in that dollar yen trade, I was in it for 3.5 months. I put on one trade. Actually, I added several times to that trade all the way down. But I was in one trade for 3.5 months. Not as much fun as being in and out of the market 10 times a day. You're not getting, your rush, your endorphins, whatever. You're not even watching the market. And so the question is, what is your objective? And my objective is to make big money in the markets. So, when I see a move like this, to me, it makes no sense when I look at these systems, these EAs, these, these turbo, robots that trade for you, or most of the way people trade the Forex market, where they, say there's some moving average, there's some, Bollinger Band on some 15-minute turnover, and you're trying to get the next 22 pips, out of one bar, and you're trying to do that 5 times a day. I'd rather sell short here and, make all of this money and just sit in it and not worry. So I'm trying to take a piece out of the middle of just huge moves, and something like this is 800 pips, if, just from here to here. It doesn't count if you got in from here and they're still in here. And so this is what I'm trying to do in my trades. And the thing is, I only need 1 or 2 a year. It's like I'm done for the year. QQQ put play I made 7 figures. I'm just going to put my feet up now. And, if it takes me 4 months until I see the next play that I can make, look, I'm going to still trade. But, when I, look, when something really sets up like it did for me that time, you may only get, 2 or 3 shots like that a year. But, frankly, the way the markets are moving now, you get so many opportunities. And then it just comes down to, what are you trying to do? Do you want to trade in and out of a daily bar 10 times a day and try and get 7 pips on, each trade? Or you want to just sit in one trade and, take 800 pips out of the middle? Mohammed, thanks for the support. Dave says, my back testing shows that you can stay in a trade for over 12 months. So look, we did a, I've been trading for so many years, and, I kind of assigned my team a task to say, look, is there any, validity or some research that supports my way of trading? And I was shocked. I never really thought they would. And basically they said that once a pattern starts like this, it usually goes in it'll go directionally for at least 100 days. So, 100 days after, a pattern's been formed, not in, obviously it goes like that, but it will go directionally. And so, yes, You know, so this is what I look for. Here's a double bottom, and it went directionally for, you know, many months thereafter. So it's pattern, price action, trade execution, and let the market do all the work for you. So Amelia says, good job, Mark. I'm an elite member. I highly recommend you join too. So that's probably a good place to stop. If you want to join my elite program, which is my daily emails, I'm going to show you how you can do that right now by watching this short video. But thanks a ton. If I don't see you back today, I will see you 4 p.m. Eastern time tomorrow. What I'm about to reveal has to be the quickest and easiest way to execute scientific based trading strategy in the world today. There's no need to scratch your head in frustration, guessing your way to halfway there, because I've already created the ideal solution for you. Now I'm going to introduce you to my daily journal. On a real basic level, it is a daily email that I sent to my inner circle of traders. This email contains the exact trades I'm looking at, where to enter, where to exit, and how much to risk on any given trade. This radically simple yet effective system of delivering scientifically tested trading results will work for you even if you are completely new to trading, or you have years of experience as a struggling trader, or you don't have a computer. A phone is all that is needed to do it. Before I show you what these tools will do, I first need to tell you what this service is not. This service is not a get-rich-quick scheme. Real results take time. You're not going to become a billionaire overnight. To get scientific studies, can you guys hear it? This to say on Facebook. I don't know if Mark Shawson realizes the huge impact he is having on some of our law. Can you guys hear me? All right, let me try and do that again. I'm not sure how to do it. looking at where to enter, where to exit, and how much to risk on any given trade. This radically simple yet effective system of delivering scientifically tested trading results will work for you even if you are completely new to trading, or you have years of experience as a struggling trader, or you don't have a computer. A phone is all that is needed these days. Before I show you what these emails look like, I first need to tell you what this service is not. This service is not a get-rich-quick scheme. Real results take time. You're not going to become a millionaire overnight. To get scientific studies, you need to execute this strategy with scientific consistency. If you're not fully committed, then this won't work for you. If you're going to jump from the next shiny object as soon as a marketing guy sends you an email or post something on Facebook, then this system is also not going to be for you. This is for men and women who are ready to stop looking for miracles. Like Mike, who had this to say on Facebook. I don't know if Mark Shaw realizes the huge impact he is having on some of our lives. I've gone from working 12-hour days in oil to sitting in front of my PC at home for a couple of hours a day, placing trades and learning from his journals. I'm now planning to go traveling too and can trade from my laptop along the way. This has been a truly life-changing experience. Or like Andy, who wrote me an email saying, "Hi Mark, just a quick thank you. Last week I lost 51% of my trades, but still returned a profit of 1,265 and 26 British pounds. And that was multiplied by 2, as I have 3 accounts, one for myself, one for my son, and another for my wife. So I grossed over 3,800 pounds in 1 week over 3 accounts using the methods you are teaching. Keep up the good work. Best regards, Andy." Andy actually attached a screenshot of the first account he mentioned in his email. I literally have hundreds upon hundreds of emails, comments, and reviews just like this about my daily email service. So let me break down exactly how it works. Every day, from Sunday to Thursday, you'll get an email from me with instructions on what to do. The email looks like this. You get an image of the chart with the analysis drawn on it, so you know exactly why I'm entering the trade. Each of the patterns I draw on this chart will have been scientifically tested. You get the exact entry and exit points so that you can enter the trade without guesswork and do it quickly. You also get a brief analytical breakdown. These small, digestible chunks of information help you retain the reason why I enter trades, and it teaches you while you make money. I call this daily email service the Pattern Trader Elite, and you no doubt noticed that the Pattern Trader Elite is, without question, the most efficient service there is. And that gives you the freedom to experience a scientifically tested trading strategy without needing to spend months or years learning it for yourself. And as any Pattern Trader Elite member will tell you, the results are off the charts. Pun intended. In fact, a woman called Marta sent me the following email. She said, "Dear Mark, I'm doing really well. Yes, the last 2 weeks I've made $15,000 on your recent trades in gold, Australian dollar versus US dollar versus Japanese yen, pound versus Japanese yen, and I do like the Dow Jones Industrials. Thank you, you're a gem, Marta." Now, before I reveal exactly how to sign up to become a Pattern Trader Elite member, I'd like to throw in a few bonuses. The first free gift you'll be receiving is the Pattern Trader Advisory. Every single week, I'll send you a 15 to 30-minute video analysis of the markets. This will give you hands-on training so that you can really accelerate your learning even faster. One of my members, Chris, wrote to me recently telling me how much he's enjoyed the education part of this service. "Hi, Mark. I doubt you will read this, but in case you do, I just wanted to say thank you. I have focused my time on learning the principles of your trading strategy as I feel that education is of most importance to me. I've made 3 trades this week. One, your recommendation on XAU USD, which is spot gold, and the other 2 on my own in oil and the dollar versus Japanese yen. Oil has dropped out of the sky nearly 500 pips in 1 week, and the dollar yen just started with momentum on the downside. I'm on holiday with the family, which has added to a very enjoyable week. Kind regards, Chris." On our website right now, the Pattern Trader Advisory is $200 per year, and it will be thrown in with the entire bundle of packages for free. The next bonus I'm going to give you is called the Master Pattern Trader. You'll get a live 1 to 2 hour session with me every single Friday. That's over 45 live sessions within the next 12 months in a group environment. Here, you get to watch how I go through the markets. Then you can ask questions and discover exactly what I believe is going to happen next. On the website right now, the Master Pattern Trader is $997, which I consider to be underpriced since it comes out to be less than $3 per day. However, here's the bad news. This service is very exclusive. It is not for everyone, which is why I don't just have a buy now button below this video. In order to get into this program, you have to do something a little bit unconventional. I'm running a little experiment where I'm offering people a huge discount. If you'd like to be part of the Pattern Trader Elite service, send an email over to markshawson@gmail.com with the subject line, "Let's do this." I'll send you a detailed summary of exactly what this program is all about, and you just tell me if I should save you a spot or not. I don't want to make this publicly available. First, make sure you copy the address below and email me at markshawson@gmail.com. And then in the subject line, just put, "Let's do this." When you do that, you've taken the first step to join hundreds of other highly successful traders. We've had many interviews with people who transformed themselves from ordinary people to elite traders. Here's just a small snippet of what they had to say.
Damn it, I'm gonna learn this and I'm gonna figure it out. Right? I finally got angry and said, you know what? I'm gonna figure it out.
You know, for me, it comes down to trust. I really trust what he does, and I follow him, and what he's saying is, accurate. And I'm really big on details, and he has the details in there.
And I must say that we intrigue. It just confirmed my belief in his method. That the way he reasons the trade, is actually correct.
Mark is a genuine, sincere, caring individual who cares about his members. He is as smart as any Forex trader that I have ever met.
And it has actually helped me being more secure and being more calm about the trading and about my. I've heard that before also from others, and I will just repeat this or repeat that. And he makes me calm, and I actually do training. I'm not so scared anymore,
And I do think that y'all's program is definitely key to that end result.
You follow Mark for a little bit of time and you listen, you see he's truly genuine and he's the real deal. He's not full of it. He's not just, oh, I'm boasting. Hey, look what I made this time around. No. It's A, B, and C is going to get you to D, E, and F.
So let's talk results then. So where are you at right now? So where's your account? You're in the blind. How much has your account grown over the last, let's say, year?
So I think the basic screenshot I gave you was like about 70 grand CHF. It's still hovering around that level. Essentially what I've done is I've withdrew the principal investment that we did. So basically all that money that is in the account right now is actually profits that gain.
I think I picked up probably 852 pips on it. But you don't have large trading. You're trading standard lots. They're worth $10. Pip is worth $10. So 852 pips in one trade is quite a financial gain.
That's what he actually brings, I think, to many. The calmness, don't worry, believe what you're doing and just and analyze it, and the way and see if it works. And we must say, his results, also showing that he works. So that's fine. I think that's great, and I'm looking forward to even working more.
I just follow what Mark has laid out, exactly for a while, and make sure to see how it works, because it does work. That's the way to go.
There's a better way. And
easier way. And I think that's what resonates mostly with me. A much better way, much less stress, and the proof is in the pudding with Mark.
You know, if there's anyone out there who's lost his money or is down and stuck, and he needs something like the lifeline to turn his life around, anyone can do that. Anyone. So it represents a lifeline, hope for anyone who's willing to learn and to apply these efforts.
I like recommendations. I like having a safety net. I like having someone to listen to, because there's always somebody smarter than you. Not the sharpest knife in the drawer, but when I follow somebody who I consider to be extremely knowledgeable and extremely trustworthy, I'm going to stick with them, and that's what I found.
But I do think that y'all's program is definitely the key to that end result.
If you're ready to join, then send an email over to markshawson@gmail.com with the subject line, "Let's do this." I hope you've enjoyed watching this presentation half as much as I enjoyed making it. Hey guys, sorry, some of you I think had problems with the sound. Can you guys hear me now? So were you able to hear the video at all? I'm really sorry. I'll try and figure it out for tomorrow. Yeah, a bit soft. So some said loud and clearly, some said, so it's, all right, I'll try and figure it out for tomorrow, guys. But I'm going to leave you here. I'm probably going to put that sell stop in the euro if you want to go ahead and try that trade out. We'll talk about everything tomorrow. Okay, sorry about the video. I'll try and straighten things out for tomorrow. Thanks again, guys.